AMD has just announced another spectacular quarterly earnings with revenue growing by 99% year over year. The operating income is up 380% and the net income is up by a whopping 352%. And the best thing is, the market reacted positively to the report, lifting AMD shares above the $100 mark for the very first time. I'm going to be breaking down the financial report and bring you insights into what I've learned in this AMD stock analysis video. The key questions are, is this growth sustainable and is it a good time to invest in AMD? So let's get right into it. The first question is relatively easy to answer. AMD has stated that they expect revenue to be around $4.1 billion in the next quarter. That represents a year-over-year growth of 46%. While that means that revenue is expected to grow in absolute numbers, it will result in a slight moderation and reducing the year-over-year numbers. But still, fantastic time for AMD. Revenue was $3.9 billion this quarter, up 99% year over year and 12% quarter on quarter, driven by higher revenue in all their segments. AMD reported the average selling price or ASP grew, driven by a richer mix of their latest Ryzen processor sales. AMD's GPU or graphics processing units ASP has also grown. Growing ASPs is a notable development. It shows market demand for AMD's products and the market's willingness to pay a higher premium for their products. Gross profit has been trending up in a similarly spectacular fashion. Look at how the profit has accelerated in recent quarters. The gross margin was 48% and trending up since 2016. It is evidence of rising ASPs. After taking away the operating expenses, the operating income was $831 million compared to $173 million a year ago. AMD has attributed this growth primarily to revenue growth. And I would attribute the revenue growth to AMD's growing popularity in the processor market, particularly among DIY PC builders and gamers. The trailing earnings per share is $282 and is also spotting a growth pattern. The free cash flow was a record $888 million compared to $152 million a year ago. All that free cash flow has strengthened AMD's cash position to $2.6 billion. AMD's balance sheet is strong with growing assets and flattish liabilities. The book value per share stands at $580. And that translates into a sky-high 18.2 price to book. The PE ratio is a high 37.7. Even with the high PE ratio, the PEG ratio is only 0.38. It is due to the equally high year-over-year revenue growth of 99%. With the expected moderation in year-over-year revenue growth to 46% in the next quarter, the PEG will rise to 1.2 and into the overvalue region. Based on these ratios, AMD is overpriced at current prices. The fair value for AMD based on a PE of 15 and earnings per share of 2.8 would be 42. Yes, that is a very low valuation compared to the current price based on the valuation formula. Fundamentals alone don't determine the share price. There are so many other factors, and one powerful one is market sentiment. AMD has just broken above the $100 mark with huge volume. I'm expecting more upside, though it is already overpriced. I made a technical analysis video for AMD that should appear at the top of the screen. Check that out for the details on why I'm expecting further upside. That is all for this video. Thanks for watching. I hope you have learned something useful. And if you'd like to learn more about technical analysis and stock analysis, do subscribe to the channel. Next, I'm making a stock analysis video on AMD versus Intel. AMD has finally caught up with Intel in the processor market, and I'm interested to find out if AMD has established itself as the new market leader. Do let me know in the comment section below what your thoughts are about this stock analysis video. And if you would like me to do more of such videos, do leave a comment below. And I'll see you soon in the next one. Bye for now.